Good evening. Welcome to Shadow Shorts. My name is Peter Reznicek from Weekly Options Advisory. This video is titled, What Will December Bring? So we're going to start out very wide view. We're going to look at these monthly charts in both the S&P and the NASDAQ. So this is the monthly bar that closed today. Tomorrow is, of course, December 1st. I think we have to assume that if you just look at the monthly, it's higher because we have what we call seller's shut-off. Seller's shut-off is a term that I coined a long time ago when one big green bar negates multiple red bars when it does it like that. And so I think if you just look at the monthly chart, there's potential for higher. But I will say this, that monthly charts can be misleading very often because of their long time frame. Like for instance, look at here, right? You would assume higher in the next month, but it's actually lower. So I will just say that as a caveat that monthly charts can sometimes be deceiving. The NDX, of course, has a very, very similar pattern, if we just stay on this longer term chart, of obliterating the prior and moving towards a prior swing high, just like we saw in the S&P. Now, if we get a little bit more granular for this, I'm going to show you two different things. I'm going to first start on profile, and then we're going to go to daily charts. So in the market profile, without getting too deep in the weeds on this, the one thing I just want to show here is the fact that we broke out of a balance area, which I believe started about here and went down to about here. Okay, we broke out of a balance area yesterday. And this is interesting because when this happens, goes up like this, and in the same session, it comes back down and goes into balance, right? We go back into balance. We call that a look above and fail. And the way that balance rules work is that if you move out of balance and you come back into balance, it increases the odds for a rotation back to the other end of balance. Lo and behold, we got that today. So these theories, work very, very well, and it played out. Although I will say it was would have been a very, very difficult trade to hold. If anybody who's listening to this was watching the price action here on November 30th, you know that it was very kind of halting, start-stop, huge divergence between sectors, huge divergence between S&P and NASDAQ. It was not an easy hold, but we did rotate down to the bottom. But then surprisingly enough, look how strong we closed. And that's what makes this kind of tricky, is that basically the market did what it was supposed to do, broke out of balance, rotated back down to the end of balance. But instead of finding further sellers below the balance area low, it did not. It staged a large late day rally and closed us here. So this basically spells a good amount of caution to me. And now I'm going to show you on the daily chart as to what the next move is in terms of what the key moving averages are that I would be looking at. Let's go back to this tasty chart here. And I'm just going to flip this over to the SPX and go back to a daily now. And I want to leave you on the daily charts here of the S&P and the NASDAQ with a key area that I think you should be watching for the month of December. And keep it really simple. I'm just looking at this 8-period moving average, and I'll show you why in a second. Notice that there's some good extension here. You got the pinch between the 821, good extension here between the 821. Looks bullish, like we're just consolidating, but today's price action on November 30th came right down to the 8 and held, and that's what I think kind of bounced us. But at the same time, the picture in the NDX is so much more bearish, as the NDX was way below the 8 during the session and then closed kind of right at the 8. So you see how it did not stage a daily close below it, but it went pretty far below it during the course of the day. So this is really the key levels that I want everybody to watch for, especially early in the month of December. Just watch that 8 exponential moving average. If a daily bar closes below it, it should open the door to lower prices, potentially seeing the 21 here in the NASDAQ, which would be about that 15.5 level. And in the S&P, I think I would say lower below that level as well, especially due to the fact that it is such a tight range in this whole area, just kind of sitting right above the 8. So remember, anything that's going to move down below here, you would think is going to cause all of this here to be overhead supply and weigh on the market, and again, bring us down to the 21 EMA. Barring all that, it should just be sideways to up into the end of the year. Again, if we don't lose this balance area and those key 8 exponential moving averages on the daily S&P and NASDAQ. Hey, this is Peter from ShadowTrader.net, and I just wanted to thank you for watching this video. If you enjoyed this content, please hit the like and subscribe buttons. And if you'd like to trade live with me every day in my weekly options advisory, then check out the link in the description below. I wish you good trading, and I'll see you in the room.